calm has returned to Beijing's financial district, and this is after the police crackdown yesterday on protesters. Organizers were telling us that thousands of people had taken to the streets around the area of the banking regulator's office, and that hundreds of police then swooped in to try to clear the area. Now, these protesters were angry because they had lost money in the peer-to-peer lending industry. This industry matches regular investors who have a little money to spend with ordinary people who really want to raise capital in order to start new businesses or buy something new. Now, in China, it's very difficult for these people to be able to go to the mainstream banks. But with these peer-to-peer lending options, they've been able to get money and higher returns, 8 to 12% on average, as compared to about 3% at the traditional banks. So recently, after the explosion of this industry, we've seen a bit of a crackdown from the authorities here. There are tighter regulations as well as liquidity crunch issues that these lenders have faced. And because of that, so many of them have started to fail recently. And that's one of the reasons why these protesters were going to the banking regulator, because even though it's not so common to see public protests in China, it is common to see investors seeking a bailout from the government. Now, the big concern that people have here is that the troubles in the peer-to-peer industry could spread now to other sectors. A lot of small companies have also been borrowing from the P2P lending, and just in the past week, there have been some reports about a router company as well as a convenience store chain that have both been facing financial difficulties because of P2P investments.